Good evening, everyone. It's about 3 minutes before 8 p.m. Wednesday, March 27th. Another expiration day for the SPY. So let's take a look. Once again, hope everybody pays attention. If you're a short-term trader, you have to pay attention to short-term charts. Nothing I can do to change it. That's just the nature of the beast. So anyway, as you see, without me pointing out, I hope, if you're using the volatility to gauge the direction of the market, then this morning the SPY looked like it would turn back down because we had a very clear upside divergence with that, hey, look at this, you guys, that V-shaped configuration. We hardly ever see that, huh? I mean, like yesterday, we had a V-shaped top formation. Well, the day before yesterday, right? And a downside divergence, and that sent the markets way up. Then look at this. We have a upside divergence on volatility. Well, that would send the markets way down for as long as it lasts, just like this one, for as long as it lasts. When the technical picture starts to stall, then that's the end of that. Same thing with this. When it starts to stall, that's the end of the up move, and get rid of it. See you later, and just spend the rest of the day counting your money, I guess. Would be the easiest thing to do, since this is a pretty common occurrence here of late. Sometimes it doesn't occur quite as frequently, but this is not a bad thing for us. It's a good thing. So 2 days ago, nice upside divergence on SPY, as we already knew, with that downside divergence in volatility. And then this morning, the price on the SPY did not come back all the way back to the same peaks, but the volatility showed a very clear bottoming pattern with a strong upside divergence, and this was definitely weak. I have to agree there. The angle of this between the two technical tops is much steeper than the angle between the two price tops, which is not much of an angle at all to speak of compared to that. So much more technical weakness in these lower time frames. And today is expiration, of course. So 15-minute, 5-minute, 10-minute, 3-minute, those kind of time frames are perfectly fine for an expiration day trade. And so the clarity in the volatility, which is the key ingredient that we really look for, the first thing we generally look at, gave us clear indications of a down move in the market today. So it didn't mean that you had to rush into anything. It wasn't any like, if I don't get this in the next 2 seconds, it's going to leave without me. Well, that wasn't really the case. You had time to make a decision this morning, but you could see that the technical weakness was prominent, and that the time frames below that 15-minute chart started to turn down. And even as some people have pointed out, we actually had a fairly descriptive downside divergence in the 3-minute chart, which was certainly the catalyst to drive it into motion, along with that strong volatility divergence and everything on a higher time frame, giving more durability and power to the move. So nothing to leave us scratching our heads here too much today. But anyway, from around 10:30 this morning until around noon, let's just call it. So about an hour and a half of total elapsed time between the peak and the bottom. And let's see, the SPY was sitting at 281.5 or more. It came down to 278 or below 278. So that's quite a sizable drop in an hour and a half period of time. What do you think that translates to? Some of you guys are just not familiar, I guess, enough with these price movements in the index and what that translates to for you You think, oh, I'll move like this. Hey, it moved from 281 down to 278 or whatever it is. Okay, it's a $3 or $4 drop or whatever it is. Okay, if you're just kind of shrugging your shoulders and saying it's a $3 or $4 drop and everything, and you're not enthusiastic about the idea that you mean it just dropped $3 or $4 in an hour and a half, like that, meaning, oh my God, if I'd invested $1,000, I had tens of 20, 30, 40, $50,000 just like that. That's the kind of energy you should have when these patterns take place. See? Because they translate to something incredibly valuable. It's not my invention, it's just the way it is. Anyway, these are the 278 puts. You don't have to guess at anything. You just buy the options that are under 10 cents and don't think about it. When the divergence was present at, hey, what was that, 1020 or 1030? Yep, that would be when the options would have been their cheapest. Yep, that certainly seems right there. And those went from, what was that? Excuse me again? 2 cents, 3 cents to, what's this number up here? 81 cents? Geez, I think the last I checked, there were 27 3 cents in 81 cents, so that is 27 times or 2,600% return in an hour and a half or less. Yeah, that's right. If you just get it through your head, many times as you've seen this, and I pointed this out, which is a common occurrence here of late, these multi-1,000% returns, it's not an infrequent occurrence at all, but it's an expiration day. And rather than running from these things like so many people that would try to advise us to do, stay away from things like that. That's craziness. Does this look crazy? That you would have invested $1,000 and had $27,000 in the next hour? Does that sound crazy? I mean, is it so crazy that it would keep you away from it, or is it crazy that it would get you involved in it? Kind of crazy. I mean, yeah, the numbers are a little bit ridiculous compared to traditional type of investing, that's for sure. But it's still true because I don't invent the numbers. I have nothing to do with the charts, and that's what the chart says, so then therefore it's true. It was 3 cents and it went to 81 cents. There's nothing any of us can do about it. That's just the fact, and that's just the way it is. See? And so if you're taking advantage of it, then your $1,000 would now be $27,000. Your $3,000 would be $81,000. Your $30,000 would be $810,000. Just like that. Just like that, in an hour, on an expiration day, with the right patterns and the right validations by volatility and everything. Everything was classic. It was just exactly right, as it so frequently is. So anyway, I hope people were able to take advantage of it. I usually only hear from people when they lose money, which absolutely has nothing to do with what I teach. But if you're doing what I teach, then you would be making money, and all you have to do is just repeat it. Same thing. Again, until you're tired of it and you've got so much money you can't count that high anymore. Because that's what you should be doing. Anyway, talk to you tomorrow. Have a nice night.